I'm joined now by Gbemi Alonge, public policy expert and founder of Nourish Box, to review some of our top stories in more detail. Good morning, Gbemi.
Hi.
Great to see you. Happy New Year. Happy
New
2026. And we start on a high note because the first story that I'd like us to discuss is the NGX performance, 100 trillion naira. We've crossed that mark.
Yeah.
Why have we crossed this mark? And what is the significance of it for Nigeria's stock markets and the economy as a whole?
It's largely because of optimism in the markets and optimism in Nigeria as a whole. So we've seen consistently, especially domestic investors, putting their money back into Nigerian companies. We've seen them, domestic investors make up over 80% of, the investors in the NGX and, continuing to plow in their money in the market. I think now, the last week, why we saw a bump from 98 trillion to over 100 trillion was largely because of, anticipation of what's going to happen when companies start to release their year-end 2025 reports and dividend payments.
Yes.
So, people are gearing up, they're preparing to basically take advantage of these companies' results and just generally the performance of companies. The companies that have been invested in, they performed well. We've also seen a lot of financial services companies, banks, basically issuing shares, to meet the CBN's recapitalization benchmark and just general performance. But it basically speaks to, confidence in the Nigerian economy.
Great. Confidence has been strong. Not to put a damper on things, I want us to talk about how you see the new tax act, especially the controversy around the capital gains tax. I know there are other controversies that have recently surfaced, but specifically the ones that are likely to have it, that the stock markets are likely to be very sensitive to capital gains. Do you see that slowing down that value accretion on the stock exchange? Or how do you see that impacting the exchange in 2026?
I think based on what we're seeing now, I think investors are probably taking not a wait and see approach. So we haven't seen any significant attrition, like people exiting the markets to save themselves or anything like that yet. So they're trying to see, Nigeria is fond of, implementing policies and then slowing down when there's pushback. So we've already seen companies sort of pushing back and claiming errors in the tax laws and requesting, some re-edition and things like that. So people will likely wait until they start seeing significant impacts before we start to see that attrition. The fact that we're even seeing a bump in the capitalization already speaks to investors not being too concerned about that. So I guess eventually, towards mid-year and towards the end of the year, we'll see how that actually impacts.
And in fact, we did see the initial sort of market uncertainty when the whole announcement came out, and then there was a correction when the finance minister then waded into debate. So it'd be interesting to monitor that going forward. But moving to another set of capital markets now, Saudi Arabia. I think for me, this is a long line of attempts to open more the Saudi economy and diversify away from oil. So now they're opening up their main board to foreign investors from the 1st of February. What's the significance of this? And tell us a bit about the details.
So, investors have been allowed, but just a certain level of investors. So before you had to have at least $500 million in assets under management. So it was only for the largest companies, really. Now, I think first, this signals to, the Saudi Arabian, like you said, opening up their economy to the rest of the world. But beyond that, they've also seen that, closing up hasn't been very favorable to them. Last year, the index basically declined significantly, and that made beyond that, the Saudi government has been very ambitious, building a lot of infrastructure. There's a lot of development going on there, and they can't fund it themselves, right? So, opening up. And it's very exciting because we're seeing this is an opportunity for the rest of the world to invest in, the likes of Aramco, that has been dubbed like one of the maybe the most profitable company in the world, and some other companies that are very solid, and it's very interesting. It's also there've been concerns about what this means for the likes of Nigeria and other emerging economies, because if you see more solid companies, being open for investments, there are concerns that there might be, exits of capital from less certain, less structured, more, volatile economies like Nigeria and those in Africa to, safer havens in quote like Saudi Arabia.
And I think, if we compare side to side, of course, we're looking at different levels of market capitalization. But the other interesting thing about this is that it was opened up to non-resident international investors. Mm-hmm. And there's always a debate, particularly for frontier and emerging market stock exchanges, about the balance of domestic and international investors and how you ward off the risk and opportunity provided by hot money, right?
Yeah.
So it'd be interesting to see whether this introduces any fundamental long-term changes to the Saudi stock exchange. But let's move back to Africa. Ghana is such an incredible economic turnaround story. I was talking earlier there on the top of the show about the $10 billion CD domestic infrastructure bond. But the issue I want us to look at is the inflation trend. Mm-hmm. We're now at 5.4% in Ghana. At a point, we were at almost 30% or higher.
Not too long ago.
Not in the space of 12 months. Mm-hmm. So, I'm saying that, John Mahama must have some stardust that he's sprinkling on his economic reform program. But tell us about this inflation trajectory in Ghana.
I think it's a mix of, so what has led to this is a mix of serendipity, I'll say, and, proper planning. So gold prices significantly skyrocketed in 2025 because, it basically doubled between 2024 when it was like 2,500 and 2025 reaching over $4,000. So gold prices, Ghana is a big, one of the largest exporters of gold, but beyond that, also structure. Now, there's a mix of monetary policy where, before now, there was a lot of contractionary monetary policy implemented in the economy to sort of rein in inflation. But beyond that, the on the fiscal side, the establishment of the Gold Board, an institution to basically sell informal or gold from like smaller mines that don't have the clout or the structure to sell to international markets. That has been introduced. So, and they have started exporting gold, right? So that alone also signals, that's a good signal to the economy. The cedi has also improved significantly. It's appreciated by over, I think, 40%. The best it's done since 1994 or something like that. So it's been very it's just so many things, but the government has been very, very intentional. Because of the IMF program they're under, they've also had to sort of rein in spending and things like that. So capital spend has reduced in 2025. All those signals, in addition to favorable interest rates for investors to invest in government bonds and securities and things like that. And then gold, the CDs, they have seen import duties and even import duties, right? So the policies around sort of making import duties cedi based rather than costing them in the dollar, just to also promote some sort of stability in the economy. So things like that posture to a government that's genuinely interested in creating stability, and it's not surprising that they're starting to reap the benefits.
When a country is on such an economic trajectory, you always think about externalities that could derail that process. So do you see any risks? Interesting, every time we talk about Ghana now, we don't just talk about gold, we talk about gold, cocoa, and oil.
Exactly.
It has these other two commodities, soft commodities and oil, of course, that it exports. But what are some of the risks that you think the government should watch? Giving this current economic nirvana that it's experiencing?
I guess generally risks to trade. Okay. Trade wars, hindrances and things like that. A lot of countries have gotten more nationalistic, protecting themselves. So that in itself, the fact that at any time there might be significant tariff bumps and things like that may sort of reduce trade is a big risk.
Sure.
Also risks around, oil is one of their...
Oil prices.
Prices. Yeah. Now, everyone is looking...
We'll be talking about that.
Sure. So, things like that. I think oil prices, just risks around trade. is the largest thing I can think of right now.
Yeah. And, speaking of oil, when we come back, we have a whole segment pretty much for the rest of the show on global oil markets. So thank you so much for now. Gbemi stays on with us.